JDs and Lentilmen, we are back for episode 5 of our Futures Bootcamp, and today we are covering liquidity. As you guys know, we are going to be going over everything that you need to know to understand and use liquidity to your best ability. We're going to be talking about what liquidity is, how to identify it, and how to use it in your strategies to make you a better trader and get you on that path towards profitability. Now, you guys know we have already covered candlesticks and patterns. We have already covered market structure and price action. We have already covered fair value gaps. Now, this is the point where things can start to get a little bit confusing, so don't get discouraged. Rewatch the video if you need to. There are pieces that are going to piece together, and you guys are going to start to understand how this puzzle is going to start to solve itself as you guys start to learn things like liquidity, pair that with things like fair value gaps, and inevitably end up with a profitable strategy, much like our BB model. I purposely filmed this entire bootcamp with this actual structure of chronological order from what you guys need to learn first to last, in my personal opinion, because it's going to help you guys start to piece together these things like using fair value gaps with our liquidity or understanding price action and market structure so that you can understand when this liquidity sweep does happen, if it is a good time to trade or not. Also, with our candlesticks, which we went over in episode 2, you guys will now understand what our structure needs to look like and what these candles need to tell us through the story that it is portraying on the chart. Now, I don't want to waste too much time. As I said, we are going to break down what liquidity is, how to identify it, and then we're going to jump over the charts, talk about how to actually implement this into your strategy to make you a better trader today. Now, as always, make sure you guys do drop a like and subscribe. If we get 50 likes on this video, we will be giving away a free eval tomorrow morning in our live trading sessions. So drop a like, subscribe, turn on those post notification bells so you guys do not miss out on another video. Obviously, today is Friday. We'll be back with videos Monday through Friday of next week to finish out our boot camp. But that is it. All you guys have to do is click the link in bio, drop a like, and you are now eligible to join in on our giveaway. Now let's go ahead and jump right into this video. Let's go ahead and start breaking down exactly what liquidity is and how we can find it within the markets. Now, I personally like to take another psychological or story type route towards this. Now, for example, with our liquidity sweeps, there is a reason behind why they occur. Now, of course, this will all make sense after I explain it, but I do want to explain to you guys why the liquidity sweep is so useful for market makers to essentially ruin our days, okay? And if you don't understand this, it is going to ruin your day eventually. If you do understand this, this is probably going to make your day time and time again, okay? So with this, you want to understand something. So we're going to find our most recent high, right? So from there, we want to see a sweep of those highs. And what is that sweep doing? Okay, so everybody that's in this short, everyone that takes a short right here is now getting their stop loss hit, okay? So they are out of the trade. They just wipe them out for an L, okay? Now, when we see this breakout, what do a lot of traders think? Oh, we saw a breakout. I'm going to get in longs. So not only have they gotten the shorts out of the market and they have lost money, but they have just now gotten the longs into the market, okay? And then what happens? We pull back down, hitting those longs shorts, and now they have reset the market from retail, meaning retail is out of shorts and retail is out of longs, unless for you are the smart person who understands what liquidity is, and you can take that short entry right here. Okay. Now, of course, you are going to get swept at some point in your life. It's part of it. Okay. I've gotten swept before. It happens, okay? You're not going to be able to tell every single time, but if you have an idea behind what this is, especially with the difference between liquidity sweeps and range liquidity, you are going to see some massive profits, and you are going to be able to get into these plays a lot sooner than other people who are going to end up chasing. This is one of the best early entry strategies out there, okay? Now, with your liquidity sweep, you first want to identify a prior high, okay, or low, depending on which side you're looking for the sweep. Now, once we do get this sweep, of course, we are looking for our breakout and retest. If we break out, we retest, and we move up, that's not a sweep. We are just continuing in that direction. If we break out and then pull back down, that could be considered our liquidity sweep. And I want to show you guys a few examples of how we can actually use this for a trading strategy once we do get over to the chart. But I want you guys to first identify what this looks like. So we have a liquidity sweep here because we come up above these highs. We sweep out all the liquidity that is resting above these highs, okay? These are all the resting orders above these highs. We sweep those, okay? We get the people out of the market, then we get people into the market, which we can inevitably get back out of the market there, right? And that is how the market makers make their money, is they sweep your ass and you have no clue what happens until today because you now understand what liquidity sweeps are, right? Same with range trading. You are in this range right here, very, very tight consolidation. Okay, and then once you see this, this is two things. You guys can either call it the A and D setup, accumulation, manipulation, and distribution, right? Accumulation, manipulation, and distribution. or this is just your range liquidity. Okay, so whichever one you want to call it, that's totally fine. But you are finding that we are accumulating right here. A lot of people are accumulating calls or shares or puts or whatever, right? So another opportunity here. Say you are short right here. Well, we come back down here and cool, you might hit TP if you are lucky, but a lot of people will take this short right here on the breakout, right? And then the people that are in longs are going to get stopped out on this breakout. Then we come back up and the market makers are able to take all of those contracts from you, buy them themselves, and push the market in the direction that they want, making a shitload of money, right? So that is the basic premise, and you guys can see I have a lot of examples drawn out here. So we could see this is our most prior low, then we come back down and we sweep this low, making a new high, right? We have more range liquidity right here where we do chop through, then we sweep these highs, and we come down, okay? So if you are in longs right here, you probably enter off this break and retest after this consolidation, okay? But then you get stopped out. Or you are in shorts and then you get stopped out on that break, okay? So this is another thing, especially when you guys are looking for your long and short positions, is you want to put your stop loss above that liquidity. So let's say we get a short. Let's say we get a short right off of these highs right here. We think that we are going to reject downwards, okay? Now, if I put my stop loss right at the top of these wicks right here, well, I just got swept out. But if I put my stop loss a little bit above that, a little bit above where I could, forecast some liquidity to possibly be, then you will be okay to take this trade down. But the issue is you want to think not like a trader. You want to think like the market, okay? So if the market is saying, or if traders are saying, I'm going to put my stop loss at 615 and say this is 615 right here, this breakout point. Well, you want to put your stop loss realistically at maybe 615, 617, right? Or whatever the hell I said, 617, something like that, okay? Because they are going to get stopped out, and then what is going to happen? The market's going to reverse, okay? It can keep going, and that's where your technical analysis is going to come into play, and that's why you have to pair it with other things, okay? But when you are able to put your stop loss above that resting liquidity, they can go ahead and take that liquidity, and you can even look for a better entry, a DCA into your entry, or you can put your stop loss right above it and get stopped out just like everybody else, and then watch your play run to TP without you. Okay, so there are multiple examples and options here. You can either be the one that wins this trade or you can be the one that loses this trade. I'll let you pick, right? So another example is this can happen a lot. And there is a time where when you see that liquidity is getting taken, you are most likely going to return to the other side and take that side's liquidity. Okay, so my example for that is, okay, so we come back down, we sweep liquidity right here. Well, let's start with this one. We sweep liquidity right here above this prior high, right? Well, what are we going to do next? We're going to go sweep this most prior low and sweep everybody out, reset in the market, and then we'll see which direction we want to move, okay? Because they are trying to not only make themselves money, right, and screw us over as the small fish in the pond, right? But they are also looking to reset the market, reset that liquidity so they can do it again, okay? So that is what you'll see a lot of times. A lot of times you might not even see a liquidity sweep within a day or within 2 days or 3 days. But when you do, you will most likely see a few within that day, and that is a sign of good price action and market structure. So this is another great thing, and you guys can look at this on any single time frame. You can look at it on the 1 minute, the 5 minute, the 10 minute, the 15 minute, the 1 hour, the four hour, the 1 day, I suppose, but really it would stop at about the 4 hour. Okay, so this is a great example. I would definitely take a screenshot of this because this will help you guys kind of understand when you are seeing liquidity. And once we put it over to the chart, it should be pretty self-explanatory. But this can be a confusing strategy for a lot. A lot of people can't get this right away, so don't be discouraged. Just understand what this looks like. Now, I'm going to make it a little bit more confusing real quick. So let's say that we have, let's say right here, okay? So let's say we just sweep these highs right here, and then we see what we talked about yesterday, our fair value gaps, okay? And this is the entry to our BB model, okay? We see a sweep of highs, right? Then we come back down. Realistically, somewhere along these lines, we are respecting a bullish fair value gap. So let's say we have a bullish fair value gap right here, and we saw price come down and retest and move up that. Okay, so it's respecting a bullish fair value gap. Great. Price is looking to continue in that direction, right? Well, we are looking for the first bearish fair value gap to be formed once we sweep highs. Okay, or obviously if we are, if this is flipped upside down, you're looking for the first bullish fair value gap. But in this scenario, we're looking for the first bearish fair value gap. So let's say this happens right here, and we get a really nice retest. We get this really nice retest and push down. Well, we are looking for our entry right around here. Like, we're looking for our entry to look something like this, where we get the entry right outside of this fair value gap, and we play this down. And where would we play this? Well, we would play this realistically back down to this level right here, which is the resting liquidity from this level and from this level that we have created, okay? Because we know that when market is going to go grab some liquidity, it's probably going to grab the other side as well. So we are going to enter this trade off of the bearish fair value gap retest, letting us know that we have now switched sides. We are looking to reverse, and we are respecting the bearish side of the market now. Okay, so this should make good sense, and I'll explain this because I have a great example over on the charts here. But this is what you guys first want to be understanding, because when you pair this with what we have talked about in general, like I told you, market structure, fair value gaps, and candlesticks, this will start to make a lot of sense, okay? Like we talked about with candlesticks. What are we going to do when we see a candle that looks like this coming out of this fair value gap, okay? What are we going to do when we see a candle coming out of the fair value gap like this and it's a red candle? Well, we know that the market is telling us a story, and that story is that we are seeing large selling pressure. We also just swept these highs and we are out of this bearish fair value gap. So we put 2 and 2 together, make a good inference, and we can now see that the market is looking to push down. Okay? So this should be pretty confusing, I'll be honest with you. Pretty confusing, okay? A lot of shit up on the board. I don't expect you guys to get this right away, but we're going to jump back over to the charts. I'm going to show you guys a little bit more about liquidity and how this actually looks on the chart and how to identify this, because it can be a little bit confusing on what is a liquidity sweep or what isn't, okay? But we recently just got a really good liquidity sweep intraday, so I'm excited to show you guys that. Unfortunately, I wasn't able to take that trade because I was filming, but, you know, part of it. Now, it is actually quite funny because we just got 2 liquidity sweeps in the last like 20 minutes while I was filming this video. Like I said, I wasn't able to take these trades, but you guys will see as I break this down if there was a trade to take or if there wasn't. Now, taking a look here, first of all, price action is god awful. Y'all watch the market structure video. Y'all watch the price action video. This is horrendous. Horrendous, bro. Absolutely horrid. Okay? Now, that's not what we're talking about, so I'm going to keep going here. We are going to find what? Our most prior high, okay, and our most prior low, okay? So our most prior high and our most prior low, or actual low here. So although this is technically the most prior high, this really is because it was actually a new high, right? And this was actually a new low. And technically you could put it like this if you really wanted to. Either way is going to work out for this example especially. But what are we looking for? We are looking for a sweep of those highs. What do we get? We get a sweep of those highs, and what did I tell you? Once we sweep highs, we are probably going to go back and sweep lows. Or once we sweep lows, we are probably going to go back and sweep highs, right? So that is exactly what happens. We see a sweep and we absolutely dump, okay? I'll talk about this play in just a second, but we absolutely dump. We come back down, retest orb, sweep these lows, and we move back up. Now, of course, this side hasn't gone and gotten liquidity yet. It's not going to happen every single time, but if you are in a trade right here, you are going to be taking profits much before this sell-off starts to happen, so it doesn't really matter. Now, a few things that I want to talk about here is neither one of these are good trade setups. Why? Price action is absolutely god-awful, and 2, on this liquidity sweep, we didn't see an entry at all. There was no entry. It literally just dumps. I mean, there's no fair value gap retest. Of course, we create some fair value gaps right here. You know, we were able to create some fair value gaps. And it looks like we were actually rejecting out of these fair value gaps, as you guys can see right here. Okay, but we don't make anything or have any kind of retracement where we're able to get an entry. So it goes. It's, you know, goes in the wind. You know, you'll never be able to take that trade again, so don't dwell on it. You didn't get an entry. It's fine. Okay, now what are we able to see on this liquidity sweep? Well, there is a little bit of an entry here. I wouldn't have taken this once again because of price action, but there is an entry here where we could have honestly taken this trade if you were able to get in around the retest of this buy. Maybe we're down on the 1 minute here and you were able to get this entry coming out of the fair value gap that we created. Well, you can go ahead and take your trade, put your fair value or put your stop loss right below the fair value gap, and then extend higher wherever your targets are. Of course, this was a horrid day of price action, so don't think that this is a great example, okay? This is just the most recent example that I have. I'm going to switch over and show you guys a good example. Okay, so I now want to break down the best example that I could possibly find on what a liquidity sweep is and how we use this with other factors to create a beautiful trade. Now, first of all, let's identify this liquidity sweep. What are we going to look for? Our most recent high, which is created right here. Now, once this high gets swept, now we are looking for an entry short, right? There is no break and retest. We simply sweep those highs and we come back down below. Also, with another confluence like our 5-minute orb fake out, where we see that we break above orb, then we break back below orb, creating this fake out. So now we have a liquidity sweep letting us know that a possible reversal is coming, and we have a 5-minute orb fake out, which is also letting us know that we aren't seeing strength that is going to push us through that orb breakout. Now, what are we looking for? We are looking for that fair value gap. Well, this gets created on the 3-minute time frame right here. And where do we get our entry? Well, we get our entry right here. Once we do break back out of this range, and I'll actually make it a little bit bigger for you. Once we break back out of this range right here, rejecting out of this fair value gap and respecting this overall bearish trend, that is where we get our entry. And you guys can see it leads to an absolute pour. Now, what do we look for here? Of course, my screenshot isn't big enough, but we did actually go down and we did sweep some lows right here. We actually created a double bottom, then formed and ran back up. So we did go and grab the other side of liquidity, which isn't going to happen every time, but will happen often enough to make sure that you are aware of it. Now for this, our targets were down at orb low, then PM lows right here, and then our 15-minute fair value gap where we did end up getting our exit. Why? Because our fair value gap seems to have a little bit, this is the most recent 15-minute fair value gap that we could find. So this was a point where we could see a bounce, and we do end up getting that bounce. We could have caught a little bit more downside, but nonetheless, this was a great trade. And why? Because we are able to identify this liquidity sweep. We sweep these highs. Once again, we sweep these highs, okay? Then we are looking for a possible reversal. Once we do get the idea that we are going to start to reverse, once we see this 5-minute orb fake out and we start to create this fair value gap, we can look to see if this fair value gap is going to get retested and respected, and we do end up moving to the downside, which is what we see. And this is seriously one of the most beautiful plays I've ever seen and taken in my life. I've talked about this thing many, many times, and I have this screenshot literally printed out and pasted into one of my notebooks because it is that good of a trade. This is something that obviously isn't going to happen every single day, but this is your best case scenario. So when we do take your best case scenario and pair it with the horrible price action that we have had recently, you can start to kind of make an inference on what is good, what is bad, what is yada 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 yada, right? So that is a great example of what liquidity actually looks like, and a great example, and then also what liquidity looks like when a price action isn't that great. So now you have seen the best thing and the worst thing of liquidity. Here is another great example. And once again, price action has been so bad across the markets that I went back a week and we are still looking at doo-doo on the charts. But what can we find? Well, we can find that our most recent low right here was swept out twice. We got a sweep here and then we swept this low. So whether you want to go off of that low or you want to go off of this low, we sweep these lows, right? So you could even take in this trade or you can take this trade. Then what happens? We go to our most prior high, right? What happens there? Well, we actually sweep these highs, okay? So you have multiple trade opportunities right there. And as we do push up, you guys can even use these prior highs as now resistance or support. So now we are using it as support and we are pressing off of it, letting us know that maybe, hey, we are able to enter a trade somewhere around here, right? Then we end up sweeping, breaking, and retesting, and we can take this trade all the way up. But understanding this portion of things is the most important, okay? Understanding that there is liquidity that is resting right here. Okay, there is liquidity that is resting right here. These are open orders of people that want to get filled, or this is where you're wanting to get filled or your stop losses, depending on which side of the trade you're in. Once again, if you are in longs right here, if you are entering longs off of the break right here, well, cool. Your position looks something like this, right? You're targeting maybe these prior highs right here, right? So you put your TP up there, and then realistically you'd put your stop loss maybe somewhere right here, right? Well, what happens? We sweep and you get stuck. You're screwed, okay? Now, for those people who were in shorts, I mean, obviously this isn't exactly, a great example for the short side of things, but if you were in shorts right here, you could see maybe we are here. Let's go like this. If you were in longs off of this right here, this is just the complete opposite. Let's say you get a long entry somewhere right here, right? Well, two things are going to happen. Either you're going to get up here and you're going to go for break even, or you're going to get stopped out by this sweep right here, because realistically, what are you going to do? Most traders are going to put it at this most recent low, but we are going to go just a little bit below those lows to create that liquidity sweep, and then, inevitably run the play that you were looking to get initially, right? So that is kind of how you need to look at it, because you need to look at it from a standpoint of, well, if you're selling here, okay, and you're buying here, what's going to happen? Because there's obviously two sides to that market. There's two sides to that story, so you need to find which way that story is going to go, okay? And then pairing that with things like, God, the price action is just so bad. Price action, I'm trying to give you guys an example, but price action is just so bad. Like, for example, when we talked about, candlesticks and the whole story thing, Here's an example of somewhere where you have zero story whatsoever. Okay, you see massive selling pressure, then you see buying pressure, then you see selling pressure, then you see massive buying pressure. I mean, the market's been horrible. So unfortunately, we don't have the best examples right now. But at the end of the day, you guys can clearly see what I'm talking about and kind of where I'm coming at with this whole liquidity idea. I'm just gonna I'm just going to buy in to this whole horrible price action type shit. I've gone back a month now, and we are still looking at absolutely atrocious price action. So I'm gonna stop bitching and moaning about it, and we're just gonna go after this because I think honestly, if you're able to find this kind of stuff in bad conditions, you should be able to find it much easier in good conditions. You know what I'm saying? So what do we do? Prior high, mark it out, blah 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 blah. What do we do? We get our nice little liquidity sweep, and then what? Now, I will tell you that there is a 2 minute gap right here. I don't really feel like switching to my 2 minute gap and then finding the chart again. But we do come back through and we break through this fair value gap and then reject out of it. So once again, that is another example of understanding what your fair value gaps and your storytelling is with these candles. Because although we did break through, well, look at this candle. This is clearly showing that we are selling off. And clearly showing that we are respecting this, even though we do slightly break through this. So from there, we can go ahead and take our entry off of the break here. I mean, look at that. Look at that. Right? So this is a thing like I was talking about. You get really good early entries. Yeah, you could have entered right on the top there, but no, you wouldn't have. Okay. Instead of chasing, once you realize that we break these lows right here and your entry looks something like this, right? Your entry is much better coming out of this gap right here, right? So there's another great example of liquidity sweep. I'll keep looking for a few more, try and get you guys one or two more examples, but it should start to make sense here. It should start to make sense kind of how we pair this stuff together, how we read it, and how we actually identify it on the charts. I'm now sitting back in my chair because we are all the way back to December 22nd of 2025 before I could find some decent price action and give you guys a good example of what a little bit of an exaggerated liquidity sweep would look like. So it's not always just going to be a wick. It's not always just going to be the head of the candle and then we're going to shoot back down. Sometimes it can look something like this, right? Where we are going to break, come back and see if we can retest, but we fail to retest, right? And then we can go ahead and take our play down. And what happens at these lows, right? Well, whether you're taking this low right here or whether you're taking this low right here, well, we come back down and we sweep these. So you could either see that we sweep this low right here and you take this trade right here. You either see that we sweep these highs right here and you take this trade down, or you see that we take this sweep right here and then you take this trade up. That swept both of these lows, okay? Then we move all the way back up. So there are multiple trades right here where you could take a short. Of course, I am so far back now that I can't even look to see if we got a retest on anything, but you could have taken a short like this, realistically targeting back down to these lows right here. You would have gotten a literal perfect exit essentially. Then you could have jumped right back into a trade. Don't do this ever, please, but you could have jumped right back into a trade once we sweep. Take these all the way up to maybe a midpoint. Realistically, you would be targeting these highs, but if we aren't going to get there, midpoint or break even. So at the end of the day, you're not losing. Then you could even be able to, take something from here up once you see that we have swept these two, and try and target that again. So there are a bunch of opportunities here. You kind of have to figure out how you want to use them. Now, for me personally, I don't use them unless or if they follow our BB model. And you guys can get access to that by clicking the link in bio, joining up, DMing me. I'll get you guys all set up with the info on that. We're going to start doing group coaches and all that kind of stuff. So that's my little plug for that. And that's the BB model. And that is our favorite model. But that is something that I would definitely recommend. Like here is a great example, actually. Look at these lows. Sweep these lows, and we actually swept them twice. So, look, right? Sweep these lows right here, push up. Sweep these lows right here, and push up like crazy, right? So, although we didn't get a real good, and honestly, we did. Honestly, we did. So, this honestly could have been an entry for the BB model. Not the prettiest one, but here's your bullish fair value gap. Here is your retesting candle right here. So, you go ahead and get your entry, and you play it up, right? And realistically, you would have played this up to high a day and then see what happens. So you would have at least gotten this play right here, which looks great. I mean, that's a 1 to 8, or sorry, 1.8 to 1, my bad. Or you could have played this up and you would have gotten a 2.73 on risk reward. So either way, it's a really, really good strategy. You just kind of have to, one, you need good price action. So understand that. But two, you really just have to kind of understand and feel it out on what we are looking for in our draw of liquidity. Because once you are going to come down and find this liquidity, well, you're going to run up and go find some other kind of liquidity. And obviously right here, like we clearly have liquidity down here, but we really don't have much up here. I mean, yes, we have these prior highs, which do get taken. We have these prior highs, which do get taken. We have these prior highs, but there really isn't much liquidity here. I mean, we could have easily seen a sweep of these highs like this. I mean, maybe not taking out this, but taking out these two highs, right? And that would have been a great sweep. But we do end up pressing through, and that's fine because you are in calls off of the sweeps on these side because we don't get sweeps on this side. And realistically, what I would have been looking at here is this trend line break right here. So we get this trend line break, we get the retest on top of our fair value gap, which we are looking for the entry off of anyways. Then we go ahead and take that entry around here. Whether that's here or whether that's here, this is still a great trade, okay? There is no reason that this would ever indicate to you that it would be a bad trade. So that is what I would recommend there. And even like, dude, even like you could get real specific with it, and I suggest not to get this, woven into this, right? Do not get super. Do not think that every time we sweep a high, we're gonna run back down, and it's gonna be a 1,000 point move and all this kind of stuff. It's not gonna happen. But understand this and start to draw this kind of stuff out. Like even this is a really tiny liquidity sweep, and not much happens. But I want to know what this looks like, what this bad reaction looks like, and what this although it's a winning trade, like although we could have taken this trade and technically gotten a win right here, realistically you would have gone break even. Okay, probably getting break even on this trade, but it's good to understand what it looks like when it looks like this and it's not the best trade, or when it looks like this and it is a really good trade, or it looks like this and you get a really good trade, right? So it is very important to understand that kind of stuff and just kind of go and back test and look through the markets and kind of see what you can find. And you would be surprised how often you do find some pretty good liquidity sweeps, especially when the market is good. So even here, look, this is a great example right here. Hold on. Okay, well maybe not. So let's just say that we did sweep. Let's put it right here because technically this would be your liquidity sweep right here. Then you come back up and you kind of get this triple topping formation, right? It looks like we took this play up here, so good little play by us, I suppose. But say this does sweep, because it really does. Now we come back down and let's say we have a little fair value gap right here, right? We press into this fair value gap on the 3 minute and then press out of it. Well, we're looking for our entry once this candle closes. So we can go ahead and take this entry, put our put our stop loss a little bit of that fair value gap, and target the liquidity on this side, right? So our liquidity would be really these two areas. Okay, so we put our stop loss or our TP, right here or right here, and boom, look at that fucking trade, dude. Look at that trade, man. And then we sweep these, and then look, I guarantee you if we were to switch down to a lower time frame, which I'm not going to do because I want to keep my spot here, but we could have taken a trade that looks like something like this, and you would have definitely taken trims at some point here. So although we don't go back and sweep those highs exactly, you're still getting a great entry and realistically a great exit as long as you are following your rules and taking your trims, right? So this is just kind of like the game that you have to play with yourself of like going through, finding good things, finding things that are, good, finding things that are bad, finding things that are meh, finding trades that you might have taken, finding trades that you wouldn't have. So you can kind of understand and start to get a true understanding of, when we see a liquidity sweep, what is actually happening? What happens when we see this? Is this a double bottom? Is this a liquidity sweep? Are we going to press through this? Is this, or, well, sorry. Like we get close, but we don't have one. But we do kind of have one on this one. So this is why you have to understand your most prior big low, this is low of day. So your most prior big low and then your most prior actual low. So this is the most prior actual low. We sweep these lows and we press up, right? Or you could have been looking for this and been a little bit more precise, right? But unfortunately, this trade just wouldn't have worked in your favor. You wouldn't have gotten the entry on that, right? Or even this trade right here where you have, some highs right here. You come up, you sweep this liquidity, okay? And it's kind of chunky around here. There's nothing too great, right? So you want to be careful. But from there, then you start to push down, and you guys can see you could have taken this trade right here, all the way back down here, targeting the low in liquidity. Or you guys could have even taken a smaller trade and said, hey, this is our most prior low, so I'm going to take this trade and literally just target, this right here. Put my stop loss right above that liquidity, and then just go ahead and target some liquidity down here, right? So there's a lot of options. I mean, I've showed you guys now 10, 15 examples, right? So there is a lot of really good ways to find this out, and I'll tell you right now, the best way is going to be going onto the charts and doing exactly what I'm doing. Back testing, looking to see what you can find, looking through. And what is this going to do? Well, this is going to help you identify market structure, right? Price action, all the things that we've been talking about. Okay, it's going to help you get better at everything simultaneously because now that you start to understand and know a lot more about the market, you're going to have a better understanding of when this kind of stuff happens, what is going to happen, or what is to come, and things like that. So Like I said, it's not going to be every day. I mean, you guys can see I'm swiping through days like crazy because not every day is going to have a perfect liquidity sweep. Is this one? Bingo. Look at that. Right? So whether we get an entry here or not, whether we get our fair value gap or not, whether it's somewhere right here, whatever, it does look like you will because of this candle right here. It looks like we probably did come back up, retest the candle on maybe the 5 or the 2 minute, and then we do push down. And you guys can see, what are we going to target? Well, we're going to target these most recent lows, okay? And that's still a great trade. You know, realistically, your entry is going to look something like this. Okay, and you took a great trade. Yes, it's not the biggest winner of all time, but it is a winner nonetheless. You know, and even something like this is another great liquidity sweep. Sweep these highs. Now, you really wouldn't have had an entry here, realistically, unless if you're down on the 1 minute. You probably wouldn't have had an entry here, but you could have taken this, you know, and just down to these, and you could have used it as a scalp, right? So there is a lot of ways to play this. I could sit here all day and do this because honestly, I enjoy to do it. I don't know where my chart is now. I mean, okay, so it looks like it's not letting us go back any further. Boy, I'm on the most expensive plan. What you? Whatever, man. Whatever, man. Whatever, man. Whatever, man. So now that we know everything about liquidity, I'm going to brief you guys again on everything that we learned in this video while I solve a Rubik's Cube. So this is my new favorite skill that I found. I think it is pretty fun. But really what we talked about with liquidity is very, very important. You guys really do need to hone in on that. Seriously, go back test your entire strategies. Go see what is working and what isn't with these liquidity sweeps. Does this liquidity sweep work? Does this liquidity sweep not work? What does it look like when this liquidity sweep works? What does it look like when this liquidity sweep doesn't work? You want to break your strategy, okay, so that you can figure out ways to fix it, okay? You want to break it down, tear it down, ruin your strategy first, not ruin it, but you know what I'm saying, take it down, okay? You want to bring it down to its most raw form, understand it so that you can start to understand. And really, at the end of the day, trading is all repetition, right? We all have a similar knowledge, okay? A lot of you guys, and whether you have been learning trading or not, you will get to a point in trading where you are at the same knowledge level as me, as other traders out there. And then it comes down to psychology. Then it comes down to, you know, your true decision making and intuition. Okay. It comes down to time on the market because you're going to understand, you know, I've seen this pattern before. I've seen this pattern before. I remember when this happened 3 years ago, you know, and it's weird, but it will happen because you have that much time in the market. You have that much of an understanding within the market that you're just simply going to see those patterns. I mean, pattern recognition is literally what trading is. Like that is literally what it is. So the better that you can get at that, the faster that you can get better at that. Really, obviously, the better off you'll be. And I'm telling you right now, the more you go back test and really just sit and look at nothing on the charts, like go look at random patterns on the charts and just see what's going on, you are going to get better at trading. And that's just part of it because you're going to start to figure out things that you originally may not have known, right? Some things like, okay, this liquidity sweep on the 5 minute, you know, XYZ happens, we get this 2 minute fair value gap, but it doesn't get respected, so then we continue higher. Or now that I see that, hey, we have this liquidity sweep, but we end up breaking above this liquidity sweep, retesting, and now it's not a sweep, it's actually a breakout and a retest, and I can now take this trade up, whether I was sitting bullish or bearish or whatever before that happened, okay? Because you want to be reactionary to the market, much like we've talked about. You don't want to be the person that's sitting there saying, yeah, I'm going to, you know, the market's going to go this way and the market's going to go this way and the market's going to go this way and then it's going to do this. Well, no, it's not. You don't know that that's going to happen at all because you are not going to be impacting the market whatsoever. Okay. So understanding those liquidity sweeps and understanding the psychology behind it. I'm telling you, the psychology behind it is a big, big deal. Okay. Understanding that when a liquidity sweep happens, the market makers are getting those sellers out of the market and the buyers out of the market in one move. You don't want to be part of that crowd. You want to be part of the market maker crowd because what are they trying to get those people out of? Their options or their futures or their contracts or whatever. Why? So that they can buy them up, drag them in that direction. And then all of us, you know, all the retail traders chase the move and feed their profits, right? If they get in low and then we're all buying in, piling on, well, what's going to happen to the price? The price is going to go in that direction because they started that move. Okay. They took you out of the market. Then they showed you what you could have had you waited for that entry or gotten the best entry. And then they go ahead and run it in that direction. What do? You chase, okay? Because maybe you don't know how to trade or whatever that is. But when you understand things like this, you can wait and you can say, okay, I see what they're doing. You know, Those shorts just got knocked out. Those longs just got knocked out. Let's go ahead and look for our entry. Boom, there's our fair value gap. We can go ahead and identify this liquidity sweep. We have our fair value gap. We are pressing down off of that fair value gap. We got a rejection or, a confluent or a move in the direction of that fair value gap, showing that we are respecting it. So that is the thing that you guys need to understand and really put into your trading game and really your mind, like understanding what is going to happen when this happens. It's chess. It's chess. What's going to happen when this happens? When this does happen, what's coming? When that happens, what's coming? When that happens, what's coming? So on and so forth. And of course, you're not going to be able to predict the market, okay? But you want to have an understanding of where it's going and you want to follow it, okay? You're not going to try and lead the market, okay? You want to be a You want to be a follower. I mean, I'm a fan of the market. I'm a follower, but I'm also a winner because I've taken the time to understand this kind of stuff. So that is liquidity. That is all that I have for you guys today. Thank you guys for staying until the end. If you guys did stay until the end, comment Rubik's Cube. And if you DM me on Discord, I'll give you an extra 10 days to your premium membership. We'll see how many DMs I get. But yeah, that's going to be it from me. Make sure you guys do drop a like, subscribe, do all the cool things. If we get to 50 likes, we'll do that free eval giveaway tomorrow on our Discord. So make sure you guys do like it up. We'll be back Monday, Tuesday, Wednesday, Thursday, Friday of next week with more videos. I do believe that next week's video is... Oh, so next week's video is on time frames. Time frames is a great topic. Very interested to get into that because there's a lot of very important things that are going to come from this. So you guys need to make sure that you're turning in for that live or for the time frames video next Monday. Then following that, we'll have risk management and then become the 1%, baby. So we are going to absolutely get after it for the rest of this boot camp. Thank you guys for tuning in. That is it for me. That was liquidity, 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 liquidity.